Hello everyone, good Saturday morning. Welcome to Elliott Wave Cafe. Well, if you're here, you're probably interested to hear what I have to say about these markets. We had very strong closes to the week. We're going to go through a bunch of charts. I want to show you a quick overall review. We're going to take a look at some breadth, at some sentiment, just to kind of tell you the overall picture. So anyway, my name is Chris Avram. I run Elliott Wave Cafe. Let's get started. All right, so let's take a look here at the S&P 500. We're going to go through the monthly charts, weekly and dailies in a pretty rapid fashion. Just kind of give you my thoughts. So here we are. The S&P 500 on the monthly continues to look obviously pretty good. I think the bear market ended here in October 13. We're starting to kind of build, momentum to the upside here. We had a very strong close to the week. If you look in here, nice rejection from just above 400 in the SPY. Now, if you can take a look at these two candles, you have, long tails, long wicks, as they call them, from very similar prices. And this what usually indicates is, in my view, I think an explosion to the upside that's coming up next. This is basically telling you buyers stepping in, right? So the markets went lower and then buyers stepped in and closed the market to the upside. This was, closed on the bullish side. This still closed a little bit bearish, but definitely there was a lot of buying coming in here as well. So, perfect indication of, I think, an upcoming trust in the market. I think these August highs are going to get attacked, if not next week, soon thereafter, and we're probably going to move towards 430 in the SPY. Here is a look at the daily time frames. This is the 50-day moving average. The markets tried to retest that line a couple of times. It's kind of trending higher, right? It's been moving since October 13. It started to kind of push back to the upside. It crossed over the 150 or over the 200. Created a bullish reversal. We're making higher highs, higher lows in here, and then they try to take it right for like 1, 2, 3, 4 days, and then most of this was reversed on Friday, right yesterday, right at the end of the week, and it just kind of came strongly and recouped a bunch of those losses. And you can see this candle in here is kind of left by its own. It's what we call an island reversal pattern in the markets. Sometimes you want to see a few more candles kind of happening in here, but you can see a few more, like in this one was a bullish one, right here back in June, in the middle of June, where we had that kind of a major thrust up in the markets. And it came after a pretty serious decline, right? That led to this kind of multi-percent rally back in here. Then you formed almost like a island reversal from the top that led to a bunch of bearishness in here. Then you had this kind of candles again, just kind of sitting up. So when you see gaps to the downside and then a gap to the upside that overtakes the drop, that's what we call reversals. And I mean, mind you, this sell-off in here was not, that aggressive like some of the other ones were, but I think there's a pretty good indication that what the market is telling you here. Listen, I know you're trying to kind of get down. You're scaring people here with the banking crisis. You're trying to build bearish sentiment across the financial media, but this ain't happening. The bulls are stepping in and trying to prop the market higher. So that's kind of how I read it by kind of studying how price has been happening. I think this is probably a pretty decent flat formation, and again, we're going to break to the upside. So if you want to study more about island reversal, you can just type it in. You can go to, images, Google, whatever, and you'll see everything about it, how the gaps are forming. And then, these are pretty good, just pure basic price action reading in here. Hey guys, by the way, if you wanted to know where you can find me on Elliott Wave Cafe on Twitter right here, right? You can come up and follow me up in there. You can also find me at Pigeon and the Statue. This is a daily newsletter, with the exception of Mondays. I have it every single day. in here where I kind of show the latest charts and Elliott wave counts on all the markets, basically from S&P, NASDAQ, Dow, US dollar, gold, silver, Bitcoin. You can come in here and you can kind of see, you know, what my projections are for price. And we've been pretty accurate in here. If you go back into the archive and look and follow all the counts for the past several months, you will see that we've been on it, you know, pretty accurately. So I think this is what's happening next. That's the big blue line in here. And there's a commentary I made, I think was it, yeah, for the newsletter on Friday, you know, and I said that the bears are anticipating a significant decline. However, if I were one of them, I would be concerned about the market's ability to withstand the barrage of negative news. If you're not getting what you're expecting, you're going to be folding. That fold could fuel a serious upside rally that can overtake the blue resistance line, and this is what I was referring to. You know, so the bears here were expecting that the markets are going to continue to crash, right? You had those kind of another couple of banks that I never heard of in my life, you know, kind of being shorted and trying to, the market kind of trying to take them down, or short sellers, whoever. And, I mean, listen, you can only go so much on this bearishness and on this news. We're finished the earnings, which were pretty damn good. You know, then inflation is coming down. You had pretty good, employment numbers as well. You have a Fed that's out of the way. So I don't know what else have really the bears to kind of you know, hang their hats on. It's probably going to be, you know, the debt fight ceiling next. You know, that's probably the last grasp at this market to kind of send it to the downside in any shape. But listen, you know, the bears are running out of arguments here. And once more of them realize that that's the case, we're going to be exploding to the upside in this market. Okay. That's pretty much my view. And then, hey, listen, if you wanted to get even more in the depths of kind of what we're doing, check out Elliott Wave Cafe Pro. I mean, you got everything in here from active positions, ETF portfolios, daily videos, you know, trades, counts. You know, we're looking at a bunch of different things in here. So go ahead and check that out as well. All right, let's continue to go from the SPY. We're going to go ahead and move to the Qs, right? This is even stronger. This market, it's been, you know, definitely outperforming. There was a lot of movement into growth versus value here since October 13. And look, just a bunch of hammers, a bunch of white candles. We change from a downtrend here to, you know, to move to the upside. Let's take a look at the weeklies. Very nice. I mean, the previous swing high offered support. This was resistance, now supporting to 310. Just basic, create a nice little hammer with a tail, another tail in here, right? These are telling you buyers are coming in. And these 330, 335 from August 2022 are going to get taken out, and we're going to move higher. And the more we do, then we're going to attack these highs and so on. So you look at the moving average in here, how it's turning upwards. It's going to offer support on the way down. I think bears have a lot to prove, a lot. Take a look at the daily. I mean, look at this, right? Just came back into the 20-day EMA. 1, 2, 3, 4 days of selling. They stopped it in here, gapped up, closed to a high that hasn't been since. I mean, you got to go back to August 2022 to see a close that high like this guy is now, right? So you're making a new closing high in here. I mean, that's as bullish as it gets. You know, so just kind of be prepared for that. Take a look at Dow Jones. Beautiful move. Again, these are just a monthly chart, so look a little bit, you know, just a little bit slower in here, but nice, just a nice correction. Look, nice correction with the hammer. We're going to make new all-time highs. Take a look at the weekly, right? Straight off the 150-day, buyer stepping in. Nope, we're not going to let this go lower. There's a massive line here at about between 340 and 345. That's a three-wave setback. We're going to break it. Take a look at Dow Jones in here on the daily, right? Again, just a nice island reversal off the 50-day. The 50-day and the 150 were kind of very close together, starting to slope upwards. We close back above the 20-day. I think that's a flat, and we're looking higher. Take a look at Russell, right? That's the kind of the bearish argument. Oh my goodness, you know, the small stocks are not doing anything. You know, they're not really responding. There is no, you know, there's no breath in this market. That this, that, and the other. Listen, if you're taking a look at the stocks, there's just so many 52 stocks that are making 52-week highs. It's not just Apple, holding the market strong, or Microsoft. There's a bunch of stuff in there you just got to go through. Almost every single day I go through the list of S&P 500, S&P 400 stocks, and I just kind of scan them out, and I just get my sentiment from that. So the Russell in here, look, this is, what is this, the monthly? Well, we're still very early, right? But just a little bit of a move up in there. Look at the weekly again, just a wick, just a tail, a week off the lows. This 170 level, no closes below that level. I mean, this level is massive. 1, 2, 3, 4, 5, 6 times being attacked, and they couldn't crash below it. I don't know. You can look at this as being corrective, whatnot, and just kind of looking 3 waves and all, but you got to prove it here. You got to take this market lower. Okay, I'll believe it when I see it. I want to see a close at 165, a close at 160, and then yeah, you can start to crash lower. But listen, this so far could become very, very bullish. I mean, you're getting multiple tails like this from this support 170. You're going to ram it to the upside, and those small caps might be, the outperformers here. I mean, I think there could be some movements happening into these markets that people don't expect. Look here at the daily, again, just a nice move off the lows. Take a look at IFA, markets outside the US, continuing to move straight up. Look at this thing, right? I'm not a big fan of these kind of hammers, hanging mans out at the highs, and still in a massive resistance, so there could be a little bit of a break, but still, the price action, it's bullish. It's been going up. Now, take a look at Bitcoin. Yeah, it's slowing down a little bit here on a monthly. It had 1, 2, 3. The 4th month was a little slower in advancing. Excuse me 1 second. We're consolidating in here a little bit in the month of May and even in the month of April. But take a look at the weekly time frames. This is not necessarily bearish. I mean, I do have a little bit of a bearish engulfing, but it looks like the market, it got a little bit too frothy to the upside, and now it's waiting for the moving average in here to kind of start to catch back. There's a massive support at 25 if they want to test that. I don't know if it's going to happen, but there are counts in here, which I talk about every day. There are counts in here that are pointing to a break to the upside still. So I would not necessarily, turn bearish on Bitcoin or on Ethereum for that matter. I think they continue to be pretty powerful. Look, they're kind of holding above this 50-day moving average. Yeah, you have almost like a convergence of prices in here. So it could be an A, B, C, D, E, maybe an A, B drop in C with a small drop, and then you go, or you can start to kind of break from here. If you break above 30,500, if you break about 30K, I think you're going higher. So in my view, not much to really do right now in Bitcoin here. Just kind of observe it and watch some of these levels. But it's up and to the right. That's pretty positive. Take a look at gold. Gold has been trying to break this massive 2100, right? 2080. Excuse me, 2080. And it's been rejected. I mean, that's 1, 2, 3, 4 times. These type of triple tops don't usually hold, so maybe gold will start to break higher. But I think as people were getting excited with this move, their resilience is probably going to get tested a little bit, right? So I do think that they're going to try to send it lower. Look at the weekly. That's a massive wick off those highs again, just like this one. And it would be devastating for the bulls in gold if this market kind of reverses lower and starts to move towards 1925 or 1875, somewhere into this neighborhood. Does look like you might have a 5-way move up already. So I'd be a little bit cautious on gold, especially after you kind of had, again, just this rejection was first, send it lower, then another rejection here. Could look a little problematic. There could be an A, there could be a B, and then you can get a C-wave decline into gold. Now, US dollar in here, cash settled, big top in September 2022, straight move down from there. Still in a downtrend, trying to find support at 100. Take a look at the weekly time frames. We'll be fighting with this level for several weeks, and it's not able to really break below it. I was thinking there's probably going to be a little bit of a swing higher, but I mean, look at this. It's just a basic 3-wave move, and that's not that bullish, right? When you look at it, and it's still in a pretty big downtrend. So it's a hard read, but it's a big support. I can't really short it because it's very close to support. There's not enough reasons to long it. So it's, to me, it's just a wait and see in the dollar. You know, they might try to break below, and then we'll see if we have resistance then on the way up towards 100, and maybe there will be a time to kind of short the dollar a bit more. But for right now, it's just a wait and just kind of watch it. And listen, if the market would be very bearish, or it would be in some kind of a crash mode, the dollar would swing higher. And it's not. It's sitting at the lows. You know, so there's no flight to safety of the US dollar in any way, like, you know, we did have during the declines. So I don't know. Again, that's just against any bearish arguments. Oil is starting to respond pretty well from the 65, double the test of these levels. I mean, look in here, back in, when was this, in 2019, 2020, you know, then you had obviously the big crash to below zero, but this level in here, it's important. You can see it right there, right there, right there, you know, 65. And they're buying it every time it kind of gets. Is this Biden administration? I have no idea who buys it, right, to refill the oil reserves or something. But look, nice little tail of these lows. There was a gap. They tried to break it lower. I don't know. There might be, in my view, I think we're probably going to push higher in oil. That's what this is telling me. And look at this formation on the daily time frames. I mean, that's a pretty awesome, what is this called? I think this is called the morning star. You know, when you have bearish, then a nice hammer, then the next day you close again with the previous. So this should be pretty bullish. That's kind of what I'm thinking. Now, we're still below the moving average. It's a little tricky, you know, but I think there's a decent chance for some upside in oil. Okay, copper pulling back a little bit. I think that's corrective. You know, just a nice kind of three-wave move, and it's not really plunging, right? It's trying to figure out what's going on with the global economic growth. So copper probably will start kind of turning back to the upside in here. Now take a look at the 10-year, just kind of building a little bit of a pullback in here. We could still be in some kind of a fourth wave. You might see it in here, like, you know, 1, 2, 1, 2, 3, 4, 5, 4, 3, maybe down in 4, one more push higher in 5. Right, 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 3, 4, and 5, 4 and 5 to complete this sequence. 1, 2, 3, 4, and 5. So, you know, they're still weak. We'll see what the Fed is going to do, right? The only way this kind of breaks, maybe, if the Fed starts to hint that they're still going with the hikes, or, you know, but we're below the this important 30-week moving average. So, you know, we might not get it. We might not get it, but I would watch this 4. If you're breaking above this 4, I think that you're going to push higher. Lower yields, as long as they're not crashing, I think they're healthy for the market overall. Take a look at the daily time frame as well. And here, you know, just a nice little, you know, almost like an A, B down in C, or a WX, a little Y wave. So, you know, the jury is still out on those rates. Commodities continuing to move. I talked about this. Even when inflation was at about 7-8%, that the commodities are going to start to pull back, you know, when the inflation starts coming down. And it's happening, all right? That's not bullish. I think that every single move they're going to make to the upside, they're going to sell it into. And I think this, once this starts correcting, it's probably going to start something like that, and then maybe drop again. I mean, look, 1, 2, 3, 4, 5. I don't know. There might be a bigger B in here, maybe, and another C, but I don't think they're ready to break to new highs. This is way too short. And then take a look also at the energy. Again, just one of the worst performing sectors here lately. 1, 2, 3, 4, 5, just like in commodities. And, you know, I think it's still got to run through some serious correction when you look at the energy overall. And there's a bunch of stocks that are on my shorting list, which I'm going to talk about it, I think, on Monday in the Pro, just to kind of give my view on some of these. There's some massive short setting up in there, and some of them already crashed seriously. And then agriculture, just a little bit of a push to the upside in here. You know, there are some decent trades. Check out the Strong Pigeon report, guys. If you want to take a look at this, I'm going to write this tomorrow morning or tonight for a posting tomorrow morning. But this kind of covers all the markets, and I take a look at, you know, just on a written format, and I take a look at the performance of the past week plus year to date, and I make commentaries on all the major markets, industries, sectors, international stocks, stuff like that. So that should give you an overall view besides this video, kind of what's going on. So I think I'm done with that. Let me show you a couple of things in terms of kind of where the breadth is and new 52-week high. So listen, this is the October 13. That's the line. And check this out. I mean, look at the green in here. Across all the markets, right? Not just, let's say, the S&P 500, but I mean, look at the Dow. I mean, this was non-existing during the decline. You know, a little bit in here when we had, but this shows me that the picture of the market is improving. It's not deteriorating. You know, the NASDAQ overall, it still looks, you know, a little bit weak because there's a bunch of crap in that, you know, in that index, and there's a bunch of weak stocks that are getting flushed down and maybe they're going to go bankrupt. But a lot of the other ones are still good. Look at the, you know, S&P in here. Look at the New York Stock Exchange. So, I don't know, this picture to me tells me there's improvement in the market. Take a look at this. You know, for those that are saying that, yeah, not all the markets are participating. Well, look, since October 13, S&P 500 up 16.7%, Dow Jones 16.5%, 1Q, right? This is the NASDAQ, not the 100, just the overall NASDAQ, 18%. And then you have IWM, the Russell, which is up only 5%. But I mean, all these three markets are almost exactly at the same percentage gains since the lows in October 13, 2022. To me, this paints a nice bullish picture, you know, and I think these guys are going to catch up to them. It's not going to be that these guys are going to catch up to that. Why would it? Right? So I don't see, you know, whatever stocks are in here on the small caps, you know, dictating what's happening in the market, right? They're not going to be the leaders of the new bull market, right? The leaders are here into these markets. Take a look at growth versus value since October 13 as well. You know, the value was outperforming up until the beginning of the year, and then, you know, back here growth started to go bam, then a period of very similar price action, and then growth started to push back to the upside. Now, why would you buy growth? If you think there is a big recession coming, if you think there's a market crash coming, like this is what's happening underneath. This is what Wall Street is buying. That's what they're doing. Okay, and they're telling you that since the lows, right? Kind of how they were starting to move back into growth and anticipating maybe the Fed finishing off, Fed probably cutting, and even if you move into a slight recession, right? You want to be owner of a growth because you know you're going to come out on the other side and we're going to grow. So, I mean, look, value down, growth up. I mean, what other picture you want from the market? Take a look at this. Look at the QQQ versus the S&P 500. Since 2023, at the beginning. Up into the right. Look at the Q versus Dow Jones. You know, look at, this is just a relative strength, relative performance, relative ratio versus the S&P, versus the Dow, and versus the Russell. Q's outperforming every single market, right? Why? Because there's growth stocks in there. And there's leaders. So you want to be a part of that, and that's what the market is showing you. Remember, they were selling them. They were selling growth, and you know, there were signs too that the Wall Street was moving out of those markets way ahead of time. And in here, they started to push back to the upside. So, you know, that's a pretty decent picture. Take a look at some volatility. So take a look at the VIX, the biggest decline. I don't know, maybe even a couple of years in here. I didn't go any, but look at this, minus 14%, minus 14.4% decline just yesterday in the VIX, because you have a new regime of volatility, right? You're not anymore into the upside. Now you're going to 20 and they're kicking it back to the downside. So now 20, it's the ceiling, just like 30 used to be before, right? Now 20 is the new ceiling, which means that if the bears have something to prove, they got to crack it, they got to hold it above there, they got to hold that fear in, and they can't. Every time there is this news about this bank, or, you know, this guy saying that, or whatever, you know, there's a little bit of a climb in volatility, and then they send it back lower. So now we're sitting at about 17, probably going to go back to 16, and you know, maybe even lower than that if we're starting to kind of get into some bullishness in here. But again, just keep an eye on the VIX. I think that's important. Look, let me show you the next one. I think. Oh yeah, this is a guy just kind of longer term. So this is where we were during the decline, right? Between 20, and every time we reached that 20 level, it would have been a top in the market. And you know, you would have started to kind of move back to the upside towards 32, 34, right? Huge volatility in here. And then now you had a little bit of a kind of a pathetic rally in VIX towards 26. They sold that down, right? That was that bottom. And, you know, now again, you're trying to climb back, but every time you kind of go back towards 20 in here, and you're sticking above that blue line, you're starting to get rejected. And eventually you'll get to do this, right? Where you are kind of below that, between 17 and 15 in the VIX, and that means uptrend. So that's kind of what I'm going to be watching for. Take a look at the sentiment. Look at the bears. I mean, look how much bearish sentiment still out there, right? This is fuel for massive rallies. Now, it's been getting better, right? There's like a little bit of a, you know, higher low, a little bit of a blip on this latest rally in the beginning of the year, right? Just a little bit black line, but there's no black lines basically since the top, right? Huge deterioration. As the market is making low, sentiment double bottoms, right? Then it started to move higher. Fear, move to the upside, come lower again into the next drop into 3,800. Fear again. And now look, just a couple of drops in here and this sentiment drops to minus 20. Like, why? All right, that's how jittery, that's how fragile the sentiment is when it comes to bearishness. But, you know, if you seen everything I showed you so far, what's happening underneath the surface, I think there's a bunch of accumulation. So again, once these guys are kind of giving up in here, I think we're gonna fuel a rally, a big rally to the upside. Take a look at the put call ratio equity. Every time it reaches this 84 line, 84 to 85, right, you have lows in the market, right, because that's when, and this is a 5-day moving average. The little brown, I mean, the little faded black lines in the back is the actual move every single day, but we just kind of smooth it out. So look, you're getting towards 85 and you find lows in the market. All right, so fear goes up. Actually, you go to 110 intraday, right? Then if you smooth it out, you see what happens. Back here as well, back towards 85, you created that low. Back here, you know, you created that low. Now, here is where we are right now. We're pretty high, right? We're at about 74. This tells you how much fear there's still out there, right? With so much put buying. And the market, right, has just barely budged, hasn't done anything. So, you know, yeah, for this guy to go back towards 85, you would either have to have a drop in the market or some kind of a news event or something for this to kind of spike out there. But I don't think it has to. I think that, you know, once the market breaks above this 4,200, this guy would start to come back to the downside. So, shows you still, you know, elevated fear levels. We got a lot of room to rally based on this. A lot of room to rally because these guys are going to start folding and then you're going to break higher. Okay, so this is a good indication to find out what's going on. I mean, you know, it's like, almost like a fear gauge into the market, right? You have a third eye in kind of what's happening. You know, people are fearful. People are fearful. Bet against them. Bet against them. That's my view. That's my call because this is what happens when you get to those levels. So, you know, I don't know. To me, that's still a pretty bullish picture overall. I think people are overly pessimistic. I'm watching CNBC, I'm watching media, I'm listening, I'm scanning Twitter, I see the comments, I see what's going on. And there's very few people that are actually excited about a market breakup, you know, and there are some serious guys. I mean, Jesus, Jeffrey Gundlach came on CNBC the other day and said, I'm getting bearish. I don't know, maybe he's buying with both hands, you know, through his fund or through the other side, or telling you one thing and then doing another, because somebody is buying. I can see that in the price. I can see in those tails. I can see the reactions, right? I can see on the accumulation distribution what's going on. So, listen, if there's a major market event and we tell bearish, I have to eat all these words I'm saying, but I'm pretty confident that we're going to push to the upside. Now, manage your risk. Again, I'm not a financial advisor. I just kind of tell you what I think here on YouTube, and you always got to be careful and manage your risk. But that's my view. So again, follow me on Twitter. Come and check us out at the Pigeon and the Statue. You're going to get daily updates every single day with my thoughts and charts on the markets. And then if you want to upgrade to Pro, this is what everything happens, and this is what I get serious with videos and positions, and this is when I let everything out. So thank you for watching, guys, and I'll be talking to you later. Bye-bye.